Yo, hello, what's up, everyone? Hope everyone is well. So, welcome to today's analysis. I remember I was last here with you guys on Thursday last week, and we did quite a good analysis last week. We broke down the markets quite well, and not really even breaking down the markets, just talking about how different ways you can look at the markets. And I hope that was a lot of help to you guys. But today, I see people still in the waiting room. I don't know what's. I've disabled it. I don't know what's taking time, but anyway, I think they're just having internet problems on their end. So I hope you're all well. For those people who didn't get to join on Thursday, I believe I shared that video on YouTube, so you can always check it. I broke it down into 4 parts. I'll show you once we get into the analysis. But as usual, welcome to today's analysis. I just want to look at the markets in a nutshell. Just most of the markets that I'm normally trading and watching, and then from there we can leave it at that. Answer a few questions here and there. Then we can end it there. As usual, I like saying this and I like saying it a lot. I'm not really. I do this just to break down the markets and give my insight. It's not what is it called? It's not signals or telling you where to buy and sell. So just looking at the markets in general and just seeing where the markets, in my own opinion, what I expect to see in the markets. So I have a lot to share today. I'll share with you guys about the markets, about some fundamentals. I'm not heavy on fundamentals. I've never been that heavy in fundamentals. I look for it to anticipate a risk in the market. But apart from that, I don't really look at the markets, at the fundamentals, and take a long-term position, because I look at fundamentals. So I keep telling people, don't confuse the two. Don't confuse fundamentals and news. Fundamentals is very fundamental. That's the backbone that drives the market. But news is the daily news that is coming out. News is noise. Okay, so news equals noise. Don't confuse the two. Fundamental is king. Okay, fundamental is much stronger than technical analysis, because it's fundamental that tends to create the direction of the market, tends to create. Now, patterns can form randomly. Don't confuse the two. Patterns can form randomly, which can have a probable outcome in the end. But in its due formation, it's very random. There's never a person sitting and saying, okay, let's create a triangle today. Today, another person comes and says, let's create a head and shoulder. It doesn't work that way. Market patterns are random, but the outcome of that random has a certain edge or a certain probability. I hope you've understood that. Okay, so let me share my screen. Let me not talk too much, because I can start talking a lot about the markets. Allow me to share my screen and just look at what is going on. So I hope you can see my screen. I hope it's clear. This is our YouTube page. So like I was saying, I shared the videos. This videos is what I shared yesterday. Okay, if you aren't in the Thursday class, okay, I did these videos, so you can come and watch them. I broke it down into just how we had it in the Zoom session. How to choose the charts. If you remember well, I talked about how to choose a certain charts depending on the time frame or where it's located. Okay, so we talked about this here. We talked about how to draw technical patterns using wicks, using bodies. So you can watch that to understand how I normally look at how to draw patterns. Then we came and talked about how to consistently trade one pattern, and I think this one got a lot of views. I don't know why. I think many people are trying to look for how to trade one pattern to perfection. Well, perfection is just something I wrote. You can never trade into perfection. You can trade it to almost near. You can become one with it. You can become one with your system, such that you and the system have a symbiotic relationship. But in the end, there's nothing perfect. You'll never have a day that you'll never get a loser. Okay, so that's another one. Then we covered I covered here the question and answers that I answered towards the end. Okay, so for those who want, go watch it, or who aren't there, go watch it. Especially this one, we covered a lot in it. Okay. Apart from that, my Forex factory, what I use for news. Something that's important that I really wanted to share today is this. I told you last week on Thursday that they're going to have daylight saving time shift, okay, in Europe. And I remember I shared about 2 weeks ago that we had the change in daylight shift in US. Okay, so what does that mean? It means that now London Open Kenyan time is at 10 a.m. Okay, it used to be 11 a.m. from November to this date. It used to be at 11 a.m. Now market has moved 1 hour behind, and we're opening at 10 a.m. Okay, so we have more longer trading hours been added to us. Markets opening 1 hour earlier is a lot of time. By 10, you need to be seated on your desk. 11, between 10 and 11, it's when markets open and markets are volatile. So if you've noticed the change yesterday and today, you might have seen it in the markets and the rest of the week. We'll have our next time daylight saving time shift next time in November. So I'll keep you guys updated. So it's good that you know that and keep updated with that. Okay. So this week, fundamentally, I don't see anything much. I don't see any major risks like last week. Last week, I remember we had quite a lot. We had the Fed talking, which was very significant in the markets. They ended up, if you go back and just look at it, they ended up increasing the interest rates. So you can see here, we had the federal funds rate. They were at 4.75. They added it, because this is previously, okay, you can see that's previously. They added it by 25 basis points to around 5%. And if you listened to the press conference later on, you could hear a bit of what Powell was saying about the economy, about quantitative tightening, how they're controlling interest rates, inflation, and all that. They still think inflation is a bit high, and that's why they've been increasing interest rates so that it can curb that. Okay, the repercussions for that, or the consequences for that, is that borrowing is more expensive. People are not investing in the market. People are saving rather than investing, because their saving can even give them more return on investment. And the effect we're seeing in the markets, we're seeing a lot of markets sort of, actually, no, I wouldn't even say markets have really been falling. Markets have sort of been moving in a sideways way. If you look at the dollar's been doing than expected. Most people think with the increase in interest rates, the dollar should be shooting, which I'll break down. I see the dollar sort of in the short term shooting to the upside, but it hasn't reacted immediately. Okay, so there's that lag in the markets, and that's how the markets work. It's never perfect. It's never just reacting immediately. Sometimes markets are ahead of reality. You can see, maybe you might find it was already factored in. Okay, and that's why you need an edge, and that's why I did this video where I talk about trading one pattern and trading it consistently. You don't want to be trading every pattern, because it can be easily discounted by fundamentals in the market. Okay, so now let's come to the charts. Let's look at what I have here. What are we looking at? I think one more thing I was sharing and talking to my team on the Discord group is that I'm doing something on candlesticks. I believe candlesticks are very underrated. Okay, I personally did not pay a lot of attention to them when I was learning how to trade, but it has come of my attention to pay a lot of attention to it, especially the 4-hour and the 1 hour candlesticks. We tend to take many trades before those candlestick closes, and it's very, very important for you to understand each candlestick and what each candlestick means. For example, there's this candlestick, this long candlestick here with a wick above and the strong red body to the downside. So that means something different from this red engulfing candlestick, marubozu engulfing stick candlestick. That's a whole different candlestick from this blue one that's here. And I think many people have never really paid a lot of attention to it, and I think I'll share moving forward. I'm doing my own research, writing my own understanding on it. This is my Discord, this is my Notion, and I'm sort of just writing my own analysis. I'm not even referring to books, or yes, I read here and there just to understand deeply what some things mean, but I'm covering a few things in-depthly on my own, just to have of what I've been observing over the years, anatomy of a candlestick, how each candlestick has different meanings inside it. So for example, this is a shooting star, but this is a shooting star on the what time frame? Okay, so this is the 4-hour time frame. So look at it, that's a shooting star. But if you come to the 1 hour candlestick, this is the 1 hour, you can see how that candlestick looks like. Okay, there's no shooting star here. This is where the candlestick started. It was sort of a doji, then we had a strong bullish candlestick, we had this bearish candlestick, then another bearish candlestick, which ended up creating this candlestick in the end. Okay, and if you go even further down to the 15-minute time frame, you can see how these different patterns, different candlesticks have different patterns inside them, and it goes like that. It's like it's like building blocks, okay? They're just building one another. It's like Legos. Many different small candlestick build up the bigger one. So I'm trying to do an in-depth analysis of just looking at each candlestick and the anatomy inside it. That's why I call it anatomy of a candlestick, because this is the main candlestick you're seeing. Is this the body? But what is it made up of? And I'm seeing you can have a shooting star like this one, exactly the same, but it's made up of different 1 hour candlesticks. I don't know if you get my point, okay? So I'm just doing that more in-depth research on that, just to understand that more clearly, which can give us an edge, because there's some shooting stars which can, if you look at the anatomy inside it, it can give you a red flag not to take that shot, because you get shooting stars at the top of a trend. Some can give us a good anatomy inside it of this is a very good shot, okay? For example, like this one. This one was a strong bullish candlestick, rejected by these 2 candlesticks towards the downside, and then market continued falling to the downside. So I'll do different research on this. You can see I have it's a whole article I'm still writing on, but I just wanted to touch a bit on that. Okay. So apart from that, let's look at markets. What's going on in the markets? Let's start off with gold. Okay. Okay. So let's start off with gold. I hope you can see my screen clearly. Okay. Gold has been in an uptrend for the past, ever since it bottomed here. So remember what I do, and I covered this last time. I talked about it in the market analysis video when I was looking at different chart analysis on Thursday. I'm normally looking at the direction of the trend. If you remember, towards the end, you had asked me to look at Bitcoin and Aussie Dollar. And I talked about how I go, these are my main time frames. So I'm looking at the daily, the 4 hour, and the 1 hour. Okay. So what I normally come and do, I'll use the daily to look at the direction of the trend. How do I know the direction of the trend? The formation of higher highs and higher lows. So to the downside, I'm looking for the formation of lower lows, lower highs. Okay. So if you take this one, I like marking those turning points. So I'll take that. So that's the top over here. Okay. So this is when market was in a downtrend. This since March 2022 last year. Okay. You can see down there, it was March. That's where market topped, started going to the downside. Okay. We came and formed a low, lower high. Okay. So lower high, came and formed a lower high here, another lower high, and then we came and formed a lower high over here. Okay. So how do I get my lower highs points? So I'm looking at this lower low, lower high. Okay, lower low, lower high, lower low, lower high. You get the gist of that. Okay, now look at this point. Market failed to break the downside, got a support. We had sort of a triple bottom to the downside. Market failed breaking this 1620, 1625 level, and that acted as a strong support. Market shot all the way to the upside. Okay, now we came and broke this formation of higher high, of lower lows. Okay, at this point. So if I mark it, so I like marking this in green. So this at that point. Okay. Let's put it in green. So I like looking at that point where market broke the formation of lower lows, lower highs, or vice versa. I put it in green. Okay, so you can see how we broke that point. Market came and retested, and then went and continued forming higher highs and higher lows. Okay, so you can see we went higher high, higher low, got a good support. Market shot all the way to a new high. Okay, now for me, gold is more or less, if I'm following the rules of what I'm talking about, it's more or less in an uptrend. Okay, a very good uptrend. And if you look at this point, you can see that market got a support, resistance here, broke it. Remember last week when I talked about a clear break of a key level? This is what I was talking about. You want to see that strong key level break. Market sort of tried to break below, did not get a successful follow through. Talked about it in the other video. Market shot to the upside. We came and retested this level. Now market is shooting to the upside. If you go to the 4 hour chart, so I'm doing a top down analysis of that of gold. Okay, if you come look at the 1 hour, the 4 hour chart, you can see sort of market sort of was moving sideways more or less at this point. Okay, so I was looking for more or less, if market was to continue falling, I was looking for it to come to the lower side, at least here, maybe to create a flag formation together with this support. So you can see these are resistance. Remember when I told you last week, market breaks and starts acting as stairs or sort of like floors. So we broke above this floor, came and acted as support. We continued up, hit the ceiling again. So I was expecting market to sort of come back down to that support level before moving to the upside, but that wasn't the case. You can see market has sort of turned at this point. And something important that I normally, it's a principle I have for a technical analyst, and maybe you guys can be having it as well. Make sure when you're looking at turning points, markets don't just turn anywhere. Okay, Markets usually come back to liquidity levels, support levels, key levels, those levels, resistance levels, before shooting to the upside, shooting to the downside. It's very, very important, and I covered it in the video. I think it was one of these videos. I think this one, on how to trade one pattern consistently. So go check that video. I talked about it there. Okay. So if you look at this level over here, someone can think market just turned out of nowhere, but actually if you go to the 1 hour chart, okay, so now I'm refining my levels. Remember, there's what I expected to see in the market. I was expecting markets after breaking this level, I was expecting to see it come to this support over here, maybe with a flag, or maybe at this level I was expecting it to come there. But since market has not come there, we're still sort of in a ranging market, okay. And market, remember, markets do this a lot, especially when they shoot to a new high. You're always ready to see markets shooting to a new high, getting some consolidation before getting a clear direction on either side, okay. So if I go down to the 1 hour chart, which I'll show you a pattern that is forming, I remember we were looking for something of a pattern like this, okay. So I remember I was talking with my students earlier on today in the Discord group. We're sort of looking for a bearish flag, okay. At this point, you can see. So let me show you how this pattern was nullified, okay. It was immediately showed no signs of going to the downside. It was a clear trade signal, not go short. Remember, I told you this last week. Whenever market shows you immediately that you're wrong, accept it, come out and wait for a clear signal, okay. Now this one showed us the same. So I was anticipating a short from this level over here, okay. So expecting markets to come and reject. Now you can see this is a support level, okay. Market broke strongly to the downside. I don't chase market, so I didn't enter down here and start saying, okay, let's continue the downside. I was waiting for a clear retest of this level, okay, sort of what we got, and then I was looking for markets to continue to the downside. However, okay, and if you look, let me show you what we shared in the Discord group. This was a private Discord group. I was looking for something of the sort. So you can see at that level, I was looking for markets to go. Oh, sorry, I'm not. Let me reshare my screen again. Sorry. I need to share my whole screen. You wouldn't be able to see that. There we go. 1 sec. So there we go. So what I was saying, I went to the Discord group, wanted to show you something. So if you look here at the Discord group, this was today at 5:45, okay. So I was saying here, I was watching gold, a clear short signal on the lower time frame will confirm this trade, okay. So if you look at this pattern, I hadn't yet gotten a short trade, okay. I was still anticipating to see a clear rejection of this level, okay. So what happened when this candlestick was forming? A few hours later, you can see that market broke to the upside. Look at that. This key level, market has broken to the upside. Strongly bullish close, okay? No clear signs yet, no shorts. Now, if you're in the Zoom session last week, I talked about such a candlestick. Towards the end, if you come to the videos, let me show you. If you come to the videos, I think it's in this part, okay? If you come that, I think towards the end, I talked about a candlestick like this one and why you should never negate them, okay? These are strong bullish candlesticks, especially when they break above a key level, because what does this candlestick suggest? Let me show you on the charts, okay? So this is what I'm talking about, understanding candlesticks and what they mean. So this pattern was nullified, okay? So what this candlestick means basically, and I talked about it, is that market tried to move to the downside, but during that time frame, market moved strongly to the downside. The bull players came in, rejected that level, strongly pushed it up, okay, to the upside, and not only pushed it to the upside, broke this key level and closed above it. Now you can see this was a clear breakout, retest, and market sort of moving to the upside, okay. Now if you look at the daily chart, look at how this is in line with one another. Market basically came and retested the support level once and twice today, yesterday and today. Now it's acting as a strong bullish candlestick. This, if it closes like this, you can easily see the gold market moving to the upside. So that's how I look at markets. You want to be paying a lot of attention to what the market is telling you. There's what I wanted to see happen in the market, because I was anticipating this market to go to the downside. That didn't happen. Market gave me different information, new information. I accepted the information. Stay out of that short trade. And it's not like now it changed ship and start buying. I don't buy recklessly, come in, out, okay, market broke this one, let me go opposite. No. I use a systematic approach. This one was nullified, stay out of it, okay? So that's on gold. So what is happening on gold now? Anticipate such a movement, okay? Now gold at this level. Now what I was telling you before I go further to that pattern that's forming, I told you over here that market didn't just stand anywhere. If you come down to the 1 hour chart, you can come and see that this was a resistance. Okay, it was a resistance broken to the upside, retested, market short to the upside. When we came back to the downside, you can see we retested that level. Okay, we retested that level, and now market is moving to the upside. So market didn't just come and turn at any point. Market came to a significant liquidity zone, then short to the upside. Okay, so I'm always looking at that. Remember, I talked about how I draw my lines and my key levels. Okay, now something that I'm anticipating, that was just there to show you guys, is that market is in a ranging market. Okay, something else that I'm just paying attention to, because market creates different types of ranging market, is that this market potentially is forming a triangle. Okay, so if you look at something of the sort, let me leave the middle line. If you look at something of the sort, you can see that market is more or less forming something of a triangle. It's a sideways movement. Some people are watching it as a rectangle like this, okay, just a sideways movement, okay, but market has turned at this point, so it's more or less like a triangle. Now we want to see if market maintains above this support level, okay, this resistance and support. Will you come and bounce off here, come back to the downside and dangle around there? So that's what I'm watching, but no trade on that one. I'm just watching the gold market to see what will happen sooner or later. So that's my analysis on gold. Aussie dollar, I remember last week most of you asked me what is happening on the Aussie dollar. So same thing, daily chart. I want to look at the big picture. Big picture market, excuse me, big picture market is moving to the down. It has been moving to the downside. Look at these patterns: lower low, lower high, lower low, lower high, lower low, rejected the same lower high, acted as a resistance. Market came to the downside. Then sort of what happened here, okay, this double top formation is what happened here again. Okay, another double top formation after markets continued the lower lows, lower high patterns. Okay, now that's one, market is in a downtrend. Two, I came to look at, now you come closer, what are the key levels? Where's market rejecting at an immediate level? Okay, now what I'm seeing is here, and we talked about this last week on Thursday, and last week Thursday was around this point when this candlestick was forming, and I said if market doesn't close above that level, then we'll be looking for markets to close to the downside, to shoot to the downside. On Thursday, market didn't close above. Friday, we sort of got this further movement to the downside. But this week, you can see, reading the market tone, sentiment, look what happened yesterday. Market didn't really move, sort of a doji formation. And then today, we are having a strong bullish candlestick formation. So you go with the markets, move with the markets. What can happen here? If this if this bullish momentum is sustained, then we can see markets strongly closing above this level. So you can see this is a significant level. That's how I trade. That's how I keep it simple. I don't complicate things. I'm just looking at resistance, support, and then certain patterns that we look at with our private students where we are looking how to get the trade. But in a big, broad, general view, I'm looking at those key levels. So can market close above this level? Now, if you go down to the 4-hour chart, we sort of had this is sort of a wedge pattern that formed around here. Markets moved to the downside. Now, what am I paying attention to? The wedge, not really. It's not a pattern I trade. I'm not really paying attention to that. What I'm really paying attention to is this key level, okay? Now, you can see over here, it was a strong support, broken to the downside, rejected, came down, dangled a bit around here, tried to break above, came back below. Now we're sort of breaking back above. You can see the previous 4-hour candlestick that closed was strongly bullish, okay? So this is an early indication. Okay, just an early indication, not a certainty, just an indication that we've broken one key level in the lower time frame. We can come and break this on the higher time frame, be it today, be it tomorrow, or towards the end of the week. So that's what I'm looking at over here now. Certain patterns are forming as well. If you take sort of like this, sort of like a trend line, it's sort of like a flag formation. Okay, so that's what also I'm watching. So this is a clear flag formation. You can see how we've rejected the upper sides, not once, not twice, but 3 times. But market is still not getting that strong momentum to push all the way to the downside in regards to the flag that was forming. Okay, because before the flag was looking like this, before this flag was like this, more or less. Okay, you can see we came touched here, and then touched here. Markets came below. Now readjusting that level, we want to see if market can come above. This can be a potential also channel information that is forming, so it can continue moving to the upside. But what will give us that certainty is this daily time frame. Can we close above? If you look at the 1 hour, I don't think there's much on the 1 hour. 1 hour, I'm just watching these significant levels, market breaking above and below this key level. So that's what I'm watching. No clear signal yet. So far, no trade. Okay, so I'm sitting patient, sitting and waiting. A lot has happened on USD Card since we last talked about it last week. Remember, last week we covered more or less the same. Okay, so I remember the last time we were covering, I think it was on Thursday, market was around here, failing to break above this level. So this was my support zone. I was watching this support. We look at it properly on the 4-hour chart. But market, what did it do? On Friday, we had this strong move to the upside to touch this level. Okay, so we touched that level, liquidity zone. I've talked about it there. You can see before this was a strong, it's sort of the same thing. Look, these are all weeks, market failing to close above. We had this break above. Remember when I talked about successful follow-throughs and failed follow-through? This was a classic failed follow-through. Strong close above, strong close back below, retest, move downside, retest, then strongly fell to the downside. And that's sort of what we're getting at this zone, okay? Better seen on the 4-hour chart. So look at that. So we were having, I remember last week we were talking about this level. If I do away with this pattern for now, we had sort of a descending triangle. I remember covering it, okay? We had sort of a pattern, okay? Then market came and rejected this level, short to the upside, came and got resistance at this level. Remember, I told you markets don't just turn anywhere, they look for significant turning points, okay? Let's turn that back to blue. Okay, you can see how we rejected that previous resistance level. Okay, it's a liquidity zone. Markets will always look for liquidity zones. Strong move to the downside, strong move to the downside. We call this a V-shaped pattern. Markets just moving up, then strongly down, or strongly down, then strongly back up. Okay, now readjusting my patterns is when I came and created sort of, I want to see if this, it's almost like the Aussie dollar and the USD card almost moving in the same direction, but vice versa. So that's sort of what is happening. The flag on the Aussie dollar is moving to the upside, and this one is moving to the downside. So I want to see how market is coming to reject this level, okay? But I won't be quick to take any buys around here, because something else that I normally look at is the question that you have to ask yourself is, okay, market is creating this pattern. How are we approaching that pattern? Are we approaching it with strong momentum, which can nullify our trade pattern? Are we coming with slowing down momentum, which is showing that market is slowing down and might start changing direction? In this case, this one has come with a strong momentum. After getting multiple supports over here, look at that strong candlestick close to the downside. So you don't want to be hurrying into this one and start getting buys or sells. It's a very tricky one, especially for the buyers. Maybe sellers might be coming in strong, but for the buyers, you need to be cautious about this one. Over here, you can easily see market coming to retest this level, then coming back down, maybe even to bounce off this support level that you can see was here before. Okay, so that has been the formation of what is happening on Aussie dollar. But in overall, markets are moving quite steeply to the downside with respect to the dollar weakness that is across the board. Okay. So that's what I have on USD card. As I finish up, I don't cover too much. US 100, this is the NASDAQ. So we've covered a commodity, which is gold. I have covered two currencies. Now we look at two indexes. Now I want to show you something about these two indexes that sort of had a disparity, okay, on the daily chart. One of the markets moved strongly to the upside, another one did not strongly move to the upside during the same time frame, okay? So what was I watching? Now, if you look at this pattern, okay? This is sort of a bullish flag pattern, which was anticipating, you can see how market is respecting the support level. I was anticipating markets to move to the upside, at least back to the $35,000 mark, okay? Now, during that same time frame, US 100, which is the NASDAQ, created its own flag. Okay, you can see this was a bullish flag. Okay, and during that time frame, this is where this disparity, markets are not perfect, not always in sync. This market didn't dangle around here, did not consolidate. You can see it went all the way up back to this resistance level, strong resistance level, which by any means is the level that you should be taking your profit, and that's where market rallied to. But on the other side, the US 30 remained to the downside. Market didn't get any volatility. We're still dangling around this level. I don't know about the S&P 500. I don't trade it. I don't trade everything, so I don't know what happened on that one. But on these two, there's sort of that difference in market momentum to the upside. This was a much better trade as compared to this one. I'm not saying that this cannot happen, this will not go to the upside. It might, but this was a much faster trade to take to the upside. So to show that disparity. But now if you come down to the 4-hour chart, what am I watching on the US 100? Now we can do away with this. Let's leave it on the daily. Yeah. Now this one, remember, usual way I analyze. By now you've already gotten the gist of it. I'm looking for key levels, turning points, liquidity zones. Okay, so what am I watching on this one? You can see market came to the resistance level, strong resistance, rejected it once and twice. Now it's moving to the downside. Now I'm looking to see how market will come and reject this level. Will you come and create sort of these candlesticks and reject to move to the upside, indicating that this is an impulse, a bullish flag correction over here and an anticipation to the upside? That's what I'm watching to see if market can come to the downside. Okay, I don't see any current bullish plays from this level. Okay, if I go down to the 1 hour chart, you can see over here even wrote we're having a successful follow through. Remember I talked about this last week. Basic analysis, okay, chart analysis. If market breaks a key level, look, this is a strong key level. That market was resistance, we broke to the upside, support. Now we strongly broke to the downside, and market is getting successful follow throughs to the downside. And that's why I'm saying I don't see any bullish plays for this one at the moment, at least until we come down to the support level, okay, and see how market is going to reject that support level. Okay, so that's mainly what I'm watching on US 100. And if I come down to the USD 30, which is now Dow Jones, market has really been in a sort of an entanglement, okay, so to say. Let me just use proper market and terms. Market has been in a consolidation over here. Okay, like I said, liquidity zones, market is failing to break above that zone. Okay, so a strong resistance has been forming around this zone. And if you come down to the 4 hour chart, you can see how market has respected that zone. Okay, look at how market is respecting. We came, touched, and this is also sort of like a trend line bounce, sort of like a channel formation. Okay, let me readjust this. Now look at that. You can see that market is sort of unable to break this level, sort of like in the form of a trend line to the downside. Okay, so we can see market, like I said, we're in an interest rate environment where interest rates are high, so it's hard to find such markets strongly just moving to the upside. Markets are factoring that cash is king at the moment, and it's better to sit on cash. But the thing that I was also saying, we're not seeing dollar moving with momentum to the upside, so there's that disparity. Okay, we are yet to see how it will turn out. But this one, now we're paying attention to this level, strong break above, bullish momentum. I failed to continue to the upside. If this 4 hour candlestick closes like this, it's a strong bearish shooting candlestick. Okay, bearish candle, markets can strongly move to the downside. So that's what I'm watching on Dow. And last but not least, I'll finish with the dollar index. Like I said, dollar's been moving to the downside, strongly moving to the downside. You can see this market has been moving to the downside. Sort of the trend has more or less been to the downside for the past, ever since we topped here last year in September. The dollar has really been weakening, but at the same time, it doesn't mean we can't get a bit of a correction. Yes, we did get this first leg correction, and we can also get a second leg correction if market is able to do a couple of things. Okay, one, if we're able to remain above this support level. Okay, so you can see this support level over here. If market is able to remain above this level, we can easily see strong support for markets to move to the upside. Okay, now something that I'm also looking at is this level. Okay, so pay attention to the daily chart. You see this level, my key levels, liquidity zones, what I've been talking about a lot. If market is able to close above this level either today or tomorrow, it can cause a lot of momentum to the upside. So today I'm waiting to see, will this candlestick close below? Okay, if it closes above, then there can be momentum to the upside with the potential of this gap close. Okay, I'm not a strong trader who will tell you trade this market to close this gap. No. For example, here I'm saying a potential gap close. Okay, which can push this market to the upside. Sometimes you can even see just market coming just up just to close this gap, then move to the downside. Okay, so that's why I never say take long-term bets on this gap close. Okay, so what I'm anticipating on this one, I want to see if we can get this gap close, and if market maintains above this support level, okay, we can easily see markets propelling to the upside and anticipating a further move to the upside on this market. Okay, so this is what I'm really watching. You can see how we're in this sort of like flag formation. So I want to see if market can maintain above, close this gap. And I see a lot of gaps on the dollar. For example, look at this. There are a lot of gaps that form on the dollar that end up being closed. There was a gap here, market closed it. There was a gap here, market closed it. Another gap here, small gap, market closed it. There was a gap here, very small one, market closed. So there are multiple of them. The multiple on them. Sometimes market don't close gaps immediately. Sometimes this market can even move to the downside, then eventually come to close that gap. So that's why I'm never really, you still need an edge or a pattern to know when to buy or sell those flag patterns. Okay, I mean those gap patterns. Okay, so that's what I'm anticipating on this one. Nothing much. On the dollar index, I really don't go down to the 1 hour chart, because the dollar is a combination of many currencies weighed together. So I don't really pay too much attention to the lower time frame. I basically pay attention to the daily chart and the 4 hour chart, just to anticipate what will happen on the dollar, okay, and the other pairs. So more or less that's what I'm watching. Let me just look at others in a nutshell. Something like Euro USD, I don't have any analysis on this one, but let's just see what's happening on this one. Remember, I always start with the daily chart. Oh wow, so also this one, market has been shooting to the upside. So also this one, this is a strong daily close that we can't not negate. Okay, this is a strong daily close, which can also, if market is strongly bullish, it can come and continue to the upside. But if not, this level can act as a strong bearish signal for markets to continue moving to the downside, especially depending on how we get today's close and tomorrow's close. Remember, and the secret I can share in with you guys, and Ken and I will notice that, is that Thursday and Friday markets has a lot of volatility, which is in the opposite direction of what market started in the week. So you can see that yesterday we had a bullish move, today a bullish move, tomorrow maybe a consolidation or another bullish move, and then Thursday and Friday just is strong bearish momentum, or even strong bullish momentum. Thursday and Fridays, they are normally strong closes. It's just like this one. Look at this one, what happened last week. This red candlestick over here was on Thursday, this was on Friday. Okay, so market started here on Monday, we started here, moved to the upside, Monday, Tuesday, Wednesday, then market strongly closed below on that day, on Thursday and Friday. On Thursday and Friday. So pay attention to those days, very important. It's just like here, look at these other ones over here. This was a Thursday, so you can see over here, this was Thursday, then this was a Friday. Look at that strong bearish close. So you normally get those happening at the end of the week, okay? Not perfectly, not all the time, but pay attention to that, okay? Especially on the indexes. You normally see 1-2% drops on Thursday and Friday. Okay, so moving forward, you guys can pay more attention to that and just see what happens. So also this one, if market is unable to strongly close above, depending on how you draw the key level, and another suggestion I can help you on drawing key levels, you normally want to draw a key level like this one. Someone might ask me, how did you really draw? Let me show you something on gold. On the 4 hour of how to refine your key level. So you might be asking me, why did I take this point? Okay, for example, why did I use the wicks? Why didn't I come down to this level? Okay, why didn't I use the body, or why didn't I use this early top at the very top? Okay, so one thing that I normally do to get a very good and clear, crisp key level is, for example, let's say I use that point, so sort of an average, the body, the wick, and the wick. But if you go down to the 1 hour time frame, you can see this same level. Let's do away with this for now. You can see this same level. Yes, this one respected, but you're seeing here we're sort of nullifying that this market broke to the upside, back to the downside. So I normally readjust, okay, just to get the body of this one. Okay, bodies are more important than the wicks. Wicks can give a lot of information, but the body is also an important turning point. So now I take that as an average, and if you come back to the 4 hour chart, you can sort of see it like that. But that's, in my opinion, that's how I normally draw it. Okay, so what was I saying on Euro USD? Is this the same one? Sorry, Euro USD, I want FXCM. I was on the daily chart. Okay, so I was looking at that. So now you want to readjust this maybe on the 4 hour chart. You can come down to the 4 hour chart, redefine this one much more clearly. Now this one, I can take it more or less at this point. Okay, now look at that. At first, it was down here. The daily chart gave me roughly around there. But if I come and refine on the 4 hour and push it up to get this body closes up here and here, you can see now if I move it up, you can get such a resistance level. So that's a much better resistance level to be watching, okay, before anything else. So if market is able to close above this level towards the end of the week, very bullish, but I see a strong bearish momentum coming. I see here, you see the bearish impulse is much stronger than this bullish impulse we are creating over here, okay? So pay attention to that. Like I said, this is not a pair I trade. Maybe if I look at GBP USD, what are guys looking at there? There's a flag pattern over here that I believe is about to be completed, okay? There's a flag pattern here, something of the sort. So market is heading for target. So there's a flag pattern here. This was a very bullish signal. Markets are still shooting to the upside, so we can see this market closing that gap over there. So nothing much on this one. I can still anticipate some bullish, because what you're looking at here as well is that that turning point is being broken, okay? Look at this level. So if you take this key level, look at that, okay? So you can see here, resistance, support, broken, try to resist. Now look how we are getting that strong close to the upside, okay? So you don't want to be easily, once you see, this was a good signal to go short, but this is nullifying that short signal. You rather stay out, especially if the market closes like that. You can strongly see markets moving to the upside. So yeah, so I think I can end it there. BTC, maybe just look at Bitcoin, what happened since we last analyzed. So yeah, so the last time we analyzed on Thursday, I think we talked about how these two levels are major significant resistance and support level, and I think they're still being respected. So nothing much has happened here. I think we'll come and recover this and revisit it some other time.